Good. Okay, welcome everybody to this webinar sponsored by FX Street. Today we are going to talk about identifying buy and sell zones. This is a little bit, hey William, this is a little bit different to traditional supply and demand, which focuses on essentially patterns, where you look for specific patterns to occur and you trade these patterns. Hi Linda. And so what we're going to do here is focus on something a little bit different. And this methodology was developed kind of as a spin-off, I suppose, or a result of writing algorithmic trading software. And it's a pretty powerful methodology. And even though today I use it quite a lot with algo trading, you can do it manually. Okay, and it's a pretty simple approach. Hey Ray. It's a really nice way to trade because it enables you to know when you should be trading and know when you should be sitting on your hands. Okay, so I'm just gonna move this little window out of the way so we have something to look at. So if you look at a price chart like this, essentially you need to know if you should be buying or selling, and it's pretty difficult to do when you're looking at this price chart. You can see prices going up now, so maybe you should be buying, or should you? And so what we need to do is we need a way to identify the beginning of buy and sell zones. Okay, and this is a pretty easy method. And what I like to do is I like to keep changing time frames until I see a very major high or a low and an opposing area being a high or a low. And we have those right here. Okay, so I need to draw. Okay, so we have a low just here, and we have a high just here. And so when I have these two, when I have identified them on a chart, and you don't have to get too crazy or anything. I mean, we have this one here as well. Where's that little squiggly thing? We have this one here as well. Okay, and you can see that here we had an important high, here we had an important low, and here we had an important high that was higher than this one. Okay, so this tells us that we should be looking to buy because the most recent high is higher than the previous one, which is just here. Okay, and then when you can see this, well, then you have to identify which side of the chart that you should be looking for demand on, and demand because we're only buying. And I like to do this by dividing the chart into two. And first of all, I mark off from the low, from here to the high. Okay, so, and then I take the other side. I'll explain this in just a second. And I go from, where is that box there? From here, and I go down like that. Okay, and the green side is the side where I am allowed to buy, and the red side, that's the side that I'm allowed to sell on. Okay, so when I see something like this and I think, wow, this looks like a nice area of, let's say, demand, I want to trade here, you're not allowed to. And why are you not allowed to? You're not allowed to because we're on the wrong side of the chart. This is the red side. We can only sell. Okay, because we have an expectation that price is going to move down on this side to areas of demand that are on this side over here. Okay, and so when you see this, the beauty of it is you're not allowed to buy any patterns on this side. You're only allowed to buy patterns on this side. And then the next question would be, well, why is that? Well, the reason is we moved from this low here all the way up to this high. Okay, so we had buying here, and the buying continued until we got to this high. So there's something over here that is interesting. It's an interesting area to buy at. We have something over here where there is an interesting area to sell at. Okay, and you know that the major flows on this time frame are moving higher because we managed to move price above this high. You can see we tested it just here. We had a bit of a failure, but then we managed to run through it. Okay, and so when you see it like this, then you know that this little piece here, right here, it's not demand, it's a reaction to demand. And the demand that it's reacting to is this one here, over here, because this is on the green side of the chart. Okay, It was tested once and twice, and now it's gone. Okay, and so now we need to find an area of supply on the red side of the chart, and we have an area of supply just here, because this area of supply is the one that caused this one to be removed. Okay, so now we're selling and we're buying. Okay, and so now it enables you to sit on your hands, because until price reaches another area of supply or demand, there's nothing to do. We sell here, we start to sell here, and we start to buy at historically respected areas. And if we look at those, you can see we have one right here. We have a nice one just here, and it was tested a couple of times, once, twice on the release. Okay, and so this would be the next logical place to buy, and this is located on the buy side of the chart. Okay, so you sell here and you take this trade until you reach the opposing side. There's also a little tiny piece of demand in here, and we know that this is demand here because last time price came to it, we came up, we went down, and then we rejected and moved higher. So this is a price sensitive area. It's on the green side of the chart, so this is an area that we would look to buy at once price pokes into it. Okay, and so you can see that we're not looking for a pattern in here, we're only focusing on demand here. We're only focusing on supply here. Okay, this is a really, really beautiful and a pretty simple way to force yourself to sit on your hands. There's nothing to do here, and you mark off your areas of supply and demand. So we have our areas of demand. We have demand here, we had demand here, we have this one down here, we have supply there. And so if price is here, there's nothing to do. I mean, you can sell here, but if price is here, then you have to wait for price to come down. So what's the closest trade? The closest trade is the demand that we have here. Once it tests, well, then it's time to look for the next trade, which is closest, which is the one just over here. And once price tests here, then the next area you look at is this one down here, because this one has already been tested once, twice. And so the likelihood of it holding again is much less. Okay, Sam Seiden style supply and demand. I think, I mean, I don't know the specifics of Sam's material, but I mean traditional supply and demand in that you have, let me mark these off. Okay, let me change colors. Let's just mark here. So when you have, I mean, I wrote this software that does this stuff for me, but you have an area like this and it marks it off. Okay, see a test here almost, see another one here. Okay, we had another one in here which was tested and now it's gone. The area that did it is this one here. And so the way that I'm qualifying areas is by what they were able to accomplish. Okay, if price would have left, need another circle, if price would have left here, if price would have left here and then gone down here and then gone up, well then this wouldn't have been supply. And the reason it wouldn't have been is because it wouldn't have accomplished anything. Because the Forex market, if we're looking at the Forex market, because it's such a decentralized market, we can't really look at volume. Okay, and so you need to look at the price movement. Okay, and this will tell us if there is strength and commitment in a move or not. And we saw commitment and strength. Where's my mouse thing? There it is. So we saw strength in here because when it left here, it managed to move down below these lows here. Okay, and then we had this tiny one here, and this was an area that was interesting because we had an area that was here, tested, price went through it, we failed, we came back, and then we left. So the origin of the move that removed this one here is right here. Price came to it, we tested it, actually we came to it right here, we went up, then we tested it, then we came down, then we came back up. Okay, and so I mean looking at trying to find areas that are, let me turn off this drawing thing, it's a little bit difficult to use. So when you're trying to identify areas of supply and demand, you can't just mark off highs and lows, because it's not going to work. And the reason it's not going to work is because you need to know if there's strength in a given move. And you can see that very, very clearly. Let's cover this point, which was pretty fundamental. Okay, so you have a price level here. So price is having a really difficult time moving above this level here. Okay, and you can see that we have supply right here. And this is supply because when it left, it managed to move below this demand. So we had an area just here. Okay, when price left here, we managed to breach an area that was historically respected. It was tested once, it failed. Tested twice, it failed. The commitment came from this area here. Okay, and now this one is gone. The area that removed it is this one here. Okay, and so you always have to do the backtrack. It's super important. And without that, you'll never know how to answer the question, which area of supply and demand is responsible for removing the other area of supply and demand. Okay, and I'm a very visual person, so I like to see visual representations of what's going on. And I just put these little dots here, and if they're gray, it means that price has already moved back beyond that level. And I call these buy and sell zones, because we had an area of supply. This is supply because it removed this area of demand here. And once price leaves and starts to move down, the deepest retracement into the area of, in this case, supply, that becomes the beginning of the sell zone. So we have a clear pullback here. So this is the cheapest price that you want to sell for. Okay, this is the reference point for the future. This is the supply, this is the sell zone. Okay, we mark it off, price comes back to it again. Each time price comes back to it, it'll probably go a little bit deeper. We went a little bit deeper. And this time, so this is the cheapest price. We went up a few pips from this one here. And then price went through this one back to the release, which is these candles just here who left. We poked into it, we filled some orders to drop price lower. And this is where price reference, price poked into it. We distributed liquidity at the area of supply, and then price left. Okay, a question here. What are the different candle colors? Okay. The white candles are distribution patterns. And so in my software, what it does is it looks inside the candle and it looks for very specific price patterns. If it sees those, it paints them white. The green ones are very specific price patterns in that they show strength. And again, it looks inside the candle and it looks for kind of anatomy of a candle. And if it sees something that fulfills a certain list of rules, well, then it paints it that color. And so I know that, let me zoom in a little here. If I have a very strong push higher, we have two white candles and then price leaves. This could almost be a green candle. Well, then I know that we have a lot of selling at this area. We have big wicks up here, which is telling us rejection, rejection, rejection. We're distributing liquidity. What does that mean? That means that we are filling orders. And then I know that the filling of orders is to move price lower once price closes below this area of distribution. So this becomes the price reference for the future. Okay, and the area that I will look to trade is the deepest retracement back into this area of supply on the release candle. This is the candle that closed below the lows on these two distribution candles. This, the high of the candle, is the place that I want to sell at. Okay, so this will be the reference point because this is the beginning of the sell zone. Okay, so to reiterate, buy and a sell zone, a buy zone is the price level, the price that, how do you say, is a window the price has to go into in order to attract buyers. And a sell zone is an area that price has to move into to attract sellers. When this candle occurred here, it had to come to this price point here. So this is where the selling occurred. This is where we look to sell in the future. And notice that the sell zone was here. So I can mark it off. Let me just remove this one here. It was here, but now price went a little bit deeper. And this is because if you guys have watched some of my previous videos, I talk a lot about pancakes, not because I like them, I also like them, but I like to use pancakes as kind of a metaphor. Let me draw this up properly where I have something that looks like that. Okay, and within that area, we have pancakes. So this square is a plate, and here we have pancakes. And I mark these pancakes off like this. I can't even see my mouse pointer, so I'm guessing. Okay. Okay, so the first pancake was at the end, right here. And once price visits that area, well, then I know that price will have to go to at least that area to find the next pancake. Because if you consider a price a fork, oh, not very good at a fork. If the fork wants to get a pancake, it has to go to the next pancake on the level of the plate. And once price visits that area, well, that pancake is gone. Once price goes back up to here, then that pancake is gone. Once price visits this one, then that one is gone. And so price has to go deeper and deeper and deeper. And once the plate of pancakes or the area of supply is removed, well, then price has to go beyond that. And in order to go beyond it, I mean, you simply have to look higher. So if we zoom out a little bit, then we have to look higher. You can see that here we have a big plate. The edge, the first pancake is here. Now it's at the top of these candles. Now it's up here. And so price will need to come up here to find the next pancake or pending orders, should there be any, in order to attract sellers back into the market. Okay. Okay, Robin is asking here, what are the different candle colors? Okay, that's fine. We saw that. And Robin is saying, in how many parts are you dividing a particular zone? I'm not really dividing the zones per se. I'm marking it off. So I'm looking at where it begins and where it stops. Let's go to a different time frame just to find something else. Okay, so if we have a look at, let me just go to a different, oh, this is fine. Okay, so let's first of all look for an area. So if we have an area like this one just here, this is a really nice one. Okay, price formed. We had something in here. We can't see what it is because it's on a small time frame. So I'll refer to this as micro supply because we can't see it on the current time frame. And you can see it was tested once, twice. It went this deep, a little bit deeper, a little bit deeper, and price came all the way back. Then it rallied. We started to paint white candles just below it. And then when price left, it tore through it. It really tore through it with conviction. Okay, so this is the area that we would look to buy at. And so when I see a zone like that, I mean, I'll box it off. It's already boxed off, as you can see. And the edge of it will be the beginning of the buy zone, unless there has been an attempt to poke into it historically. And you can see there has right here. I mean, price came all the way back down to it here. So the buy zone is at the edge of this area of demand right there, because this is where price had to go to in order for this to happen. So if you look here, this is where we would look to buy it. And you see price came to it almost to the pip. And it looks like magic, but it's not. It really isn't. It's just the way that the price reacts. It has to go a little bit deeper, because essentially you have a balancing act between supply and demand, where you have a constant flow of liquidity that's moving into buy positions and sell positions. And then you have people's stop losses and they get hit, and that releases liquidity that is then bought up by a counterparty and used to push price in the opposite direction. Okay, so there's a constant, it's almost like a bathtub. When you get a bathtub and you're shaking it back and forth, how the waves are moving from one end to the other end. It's very, very much like that. And if one push is a little bit bigger, well, then there's going to be a wave that's going to spill over the other end of the tub. Okay, and the same thing is happening here. Okay, understood. Next penetration of the zone will be deeper than the previous. Yes, exactly. Exactly. So that's typically what you'll see, and you'll see it all the time like that. So, I mean, let's even go to the 1 minute chart, because that can be quite interesting, because you can Let's find something else that's, yeah, this is a nice one because it's moving like so. Okay, so what we have here is we have constant moving from one area to the other area. Okay, if we look at, let's look at this one here. So you had an area here, this area was formed, and it is valid because price was able to close and trade below these lows. We're on the 1 minute chart, so this is micro pools of liquidity, but on the 1 minute chart, they're still relevant. Of course, on the 1 minute chart, you're exposed to just normal volatility, but you can still trade using the exact same rules. And so we had this area here. When price left here, it went all the way down here. Price came back to it. It went to it almost to the pip. Then it came down and it went up. We started to paint white candles in it, telling us that we're gonna. It's almost like someone who's catching their breath between heats in a race. You know, this was the first race, and then the white candle. Okay, they're catching their breath. Then the next race begins. Okay, so when you have strong pushes, and then you have white candles or just pauses in price, this is the athlete who's taking a break before they continue on. Okay, and the same thing is occurring here. We have buyers, okay, and then they're taking a break, and during this break they are accumulating positions, which in this case were to push price higher. Okay, and so the origin of the move that was able to completely consume all of the potential liquidity at this area occurred here at this white candle just here. So this becomes a reference point. Price comes to it, we go a little bit beyond it, and then we fly north. But we still have this one here. Okay, this one is there. Now it's removed by this one here. Okay, tested, we go through it, but we fail. And then this is the one here that causes price to trade below it. We have closes below the low of this box. And so you mark off the area where this originated from, which is here. White candles, okay? So this is, again, someone taking a breather before something happens. Software found it there. Price left. We pull back the slingshot, and then we leave. So this becomes a reference point for the future. Price comes up to this area, and then we shoot south. Okay, and then you can see, use watch. Did it make it? It didn't make it. Did we make it? We didn't make it. Did we make it? Yeah, we made it. Okay, what does that mean? Well, that means which area of demand was strong enough to consume this area of supply. It was this one here. So you go back here, you remove this one is now gone. And then you go back here, you wait for the software update. Then this is the one you trade, and then price went down to it again, and then we left. Okay, and now price is here. And until this one has been removed, price is moving higher. This is kind of like the turning point. And in the meantime, we formed this area here. We formed this area here. This is an interesting one because when price left here, we managed to move above this high here. We had a small little area here that was tested. And I'm constantly looking for areas that have been tested but not breached. Areas that have been tested again but not breached. And then at some stage in the future, that area will be breached. And then you have to say, okay, which area was strong enough? What is the origin of the move that moved through that area? This is the origin of the move that removed the area that's over here to the left. Okay, the same thing here. We have a test, failure. We start to paint white candles. What's this? This is the athlete gaining their breath before they continue on the next heat. Boom. Okay, this one's gone. Which one do we have now? It's this one here. Okay. So this is the one we trade. Price comes down to it, and then we leave. Okay, and this goes on over and over and over and over again. This is a 1 minute chart, but that doesn't matter. I mean, this happens on the monthly chart as well. Go to the monthly chart, and we can have a look. I don't know if I have any data. Let me delete all of these objects. Okay, so the exact same thing is happening here. Okay, so we had, move this over here. I don't have enough data on this time frame, but we have a really strong push higher. Okay, so we had, I'm guessing, something over here that I can't see on this time frame. Price tested it. This is probably not the first time this area has been tested because the reaction was quite small. But price tested it, then we left. We rallied, the athlete took a sprint, having a bit of a break, and then boom, we have the explosion. Price moves higher. What area did it? It's this one right here, right there. So this is the area that we can expect price to react at in the future. Price goes up, we pull the slingshot back, and we leave. What does that tell us? All right, we have the buy zone. We know the most expensive price we want to pay for the euro US dollar at this stage. Once price leaves above this high, then there's nothing to do on this time frame until price comes below this low, because the cheapest price has already been set. When price is here, this is too expensive, too expensive. You've got to wait. Price comes all the way down. Where does it go? It goes exactly to our buy zone. We pierce into it, we go a little bit deeper, we get pretty close to the edge, as a matter of fact. This box is dotted, so we actually went to it, and now price left. And until this is removed, when this is removed, then we know, okay, now we know that we have an opposing area that's even stronger than this area. And we have that right here. We have the athlete who sprints. Whew, that was a tough run. They have a break. For 2 months, they wait. What do? In trading, they're accumulating short positions, okay? And then you have the big run, boom, boom. And then on this candle, we cut below it. Where's the break? Where's the pause between the pushes? It's right here. This is where we sell. Price comes to it, okay? And then you sit, there's nothing to do until this is gone. When this one's gone, you do the exact same thing. You identify the area that removed this. Okay, the first area you went over on the 1 minute was back in 1997. On the 1 minute, no, this was it was kind of bleeding edge price. So today. Hey, Carlos. Nice to see you in here. It's been a while. Okay, so it's the same thing happens, and the cool thing about it, I mean, my old Forex mentor, my trading mentor, his name is Chris Laurie. You guys probably know him. He taught me to look at the chart in a very, very specific way, and he never traded supply and demand. He traded support and resistance. He's a support and resistance trader, but the methodology is pretty much the same. You look for areas that are being respected, then you look for those areas to be violated, and then you look for the areas that violated them, and these are the ones that you would look to trade. So you have, okay, let's go to a different time frame. Let's just try something else. Okay, I'm gonna move this over here now, a bit lower. Okay, so if we have a look here, you can see here that we had same thing here. We had white candle there, tested once, twice. This candle here, you see we had the athlete and the run, the break, and then the run, boom, boom, and then we closed below it. What area did it? This one did. Right here. This is the one. We had a test, price came back down, then we have the big strong move. So now it's gone. What area removed it? This one did. So now we have this one. Tested, 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 and now it's gone. What area removed it? This is a really big candle, isn't it? This one did. Tested, tested, tested. Okay, and now we have, this is kind of a messy one, so there's not a lot of clarity on this time frame. And so what you would do is, I mean, looking at this, we have kind of resistance becomes support. Okay, and so this is difficult to see because it's on the weekly time frame, but we have this here, so we have something like that. Okay, but the origin of the move that removed it, completely removed it, we have something up here. So you've got something here, so we have a few areas to look at. Okay, price tested it, and it wriggled through, didn't it? It went down it. It went down through it. And then we had price moving down, we came back, and the origin of the move that actually was capable of moving through this area is here. So you go like that. This is ugly though. This is pretty ugly stuff. Price went through it, went all the way through it, and we went down. Now we see it was tested once. The price didn't trade above it. We tested twice. Price didn't trade above it. And now we have this one. So now in a year, or whenever price comes down here, now you know exactly where to buy. 1, about the 1300 area. This is a really interesting area to buy for the reasons that we just talked about. Okay, then you can go down. Let's go down to, let's say, the 30-minute chart. And the same thing occurs. But now let's do it a little bit differently. Let's do it using our boxes. Okay, so we want to look for a major swing. We got one from here to here. So we have, I have to use these. Oh, these are terrible drawing tools. Okay, so we want red because now price is going down. So from here to here. And we have the green one, which goes from the low roughly to here. Okay, and so we're not allowed to do any selling here, only buying, only selling, no buying. And so here we have there's not a lot to do, is there? We have this one here, which is nice. We had, okay, can you guys see my mouse? It's not very clear, is it? I'm going to have to turn this like annotation bit off. It's not very clear. I'll just do this manually. Okay, so we know that we have our box, the high of which is here, and it's divided here. So here's our our sell zone, and the buy zone goes to here. Okay, so now we have to find those areas that have been removed. Okay, look for areas in the price. You can just scan any price chart and say, where has price attempted to go numerous times and failed? I can see very clearly right here. Look at this. Test, down, oh, push, failure, push, failure, push, big failure, and then it's finally removed. Okay, so there's something in here. There's a sell zone in here that was holding price for a period of time. And now you want to see that the push, the break, and the conviction that moved it. What area did it? This area did it right here. Okay, this is when we trade. Price goes through it. We cut this, we remove this. Price comes down, we test it, and we move back down. Okay, what area removed this one? This one right here. Okay, price comes up to it, we fail. Price comes up to it, we fail. And now we're fighting with this 30-minute area. Oops, 30-minute area just here. Let me remove this, it's kind of in the way. Okay, and now what happens when this one is removed? Well, then this is when you look for the area that did it. It's a bit difficult to see now. We need to find something, but so far we have something like that. But we don't see any big strong pushes yet. Okay, so there's nothing really to do just yet. I mean, that would be forcing it. Doing that would be forcing it. So you have to wait patiently. So for the time being, there's nothing to do. We just have to wait. As a matter of fact, this would still be here. Oops. This would still be here because it's still there. Patience. Like that. Okay. So that one's still there. It's still there. Okay. So there's nothing to do. So if it's still there, then it can still be traded until it's gone. I mean, when you start to lose trades, when you take your loss, that means that it's time to trade in the other direction. Okay. Because your area of supply or demand has been removed, and you say, okay, selling at that area is no longer going to work. Now I have to buy at the area that removed that. And so you have to be willing to, to turn on a dime. Okay. That's fine. That's okay. Let me find, I wish I had better drawing tools. I would try and do a trading Picasso for you, but I don't, unfortunately. Let's try and find something else. Let's have a look at, I don't know. Let's have a look at the euro pound. What's going on here? All right. Where did price turn? Where do we have the beginning of a buy zone? If you look at this, you can see price went up, it came down, it turned around. What is that telling us? It means that we have buy zone right there. Okay. So price tested there, and now it's gone. What area removed it? It's this one here. Price cut through it. Price, you see right here, right, as soon as it was established, price tried to go up to it, but it failed. So the beginning of the sell zone would be somewhere like that. Okay, price came to it, we went up to it, and then we left, we went up, and then we had a big spike up to an area that's slightly higher, And this is the same thing where we have price reacted an area. So we had support for something there. It was tested. There's nothing to do. So this one would have lost because obviously you're not going to win everything. Okay, tested. What area removed it? Boom, this one here. This is a really nice one here. So if we have a look, a nice close look, you can see that. Okay, this candle, the close of this candle is below the low of this one. The body of this is in the range of the previous, this is in the range of that, this is in the range of that. And so the area would be from here to here. Okay, zoom out. Price poked up into it, then it's gone. This one's been removed. We lost a trade. Price poked up into that one, then we're gone. But notice as well, what you can see right here. See here we have 2 wicks on this 30-minute chart. On the 1-minute chart, this is a rally, accumulation, a rally, accumulation, rally, a test, test, consumption. And so this is support, which becomes resistance. On the smaller time frames, you can't see it on this one now. This becomes our reference point. In here, between this candle and this candle, you have something that looks like this, where you have, and price goes up, come on, price goes up, sideways, up, down, sideways, up, down. Okay, and this, what you can see here, when price goes up and goes down, that's this, up and down, and then price goes a little bit sideways, then it goes up, then it goes down. Okay, it goes up and then it goes down. So this is what it looks like if you looked inside these candles just here. Okay, so what we can see there is that we can see we have support for the price, so there's demand in here, tiny demand. As a matter of fact, let's have a look at it, shall we? Let's just mark this off. We'll go with something like that. We'll go to it's going to remove this one. I'm going to remove this one, just so we don't have too many levels to confuse us. We'll go to the 5-minute. I can do this without getting square right. Okay, here. Okay, here it is. Okay, so you can see right here the exact same thing that we talked about. Okay, so you have price went up, we formed a high, we came down, we rallied, we moved sideways, and we cut through it. So this little high, this tiny little micro area of supply is right here. Now it's gone. The area that did it, removed it, is here. Okay, it was tested, failed, came down to the child, to the parent, this is the child was tested, and then price cut through it. The origin and move that cut through it is up here. There's something up here. You see these white candles, the 2 white candles here? Let's just mark off the whole area. Tested, it's gone. Okay, so the new sell zone is from the high here, so this becomes a reference point for the future. Did price make it? It didn't, because we have this area here. This is a child, because this is reacting to this one here. Price tests it, and within this one here, there's a similar pattern. You can see how you see the continuation pattern between this candle and this candle. Price tested it, then it moved higher. Okay, so there's demand in here. Supply, there must be supply in here, because when price left here, we cut through this area, we consume this demand, which is tested, consumed. Okay, and so there's another one in here, and this is the one that was tested once and twice. So we have first the sell zone is here, price came to at least that price point, it went higher, and so next time price is very, very likely going to move higher through and beyond that. Okay. Let's see here. Okay, Carlos. When going to a different time frame, do you believe the structure that shows the strongest extended range candle makes a stronger argument for the profitable zero pending other enhances parameters? I mean, yeah, ideally, I like to I like to focus on the bigger time frames. Because on the 1 minute chart, I mean, I almost never find, I'll be on the 1 minute chart for educational purposes, but I'd never take a trade on the 1 minute chart. But if I find an hour, 4 hour, or a daily area, then I'll mark it off. And then if there's no clarity on the 1 hour or the 30 minute or the 15, maybe I'll have to go to the 1 minute chart to identify or to fine tune or refine my entry. And then I'll do that. But otherwise, I don't look at the little one. But sometimes you have to go to the 1 minute chart or the tiny time frames to find that candle, you know, where you have like the first run, the break, and then the next run. Sometimes it requires you keep going to the smaller time frames, what I like to refer to as taking an X-ray, and then you can use that to refine your entry. Yes, sometimes the ERC candle is on the tiny time frames and maybe not all that visible on the bigger time frames. So if we look, you have a look here where we have a big strong push, 2 white candles, this candle closed below here. These 2 candles we had a test. Just to kind of clarify what this is, we have a test, the buy zone, price goes deeper, this one goes through it, the slingshot is pulled back, then we leave. So this becomes the beginning. This is of course, this is probably maybe 1 hour price action that you can't see here. We test, buy zone, deeper buy zone. This candle goes through it. We don't know what that area looks like over here, but it's certainly gone with this candle here. And price will reference that area on its way down. Okay, and so you could actually, I don't know what's in there, we can't see on this time frame, but there's probably something in here, maybe a continuation pattern between the high here and the low here, where price comes down sideways and moves down. And this is a release candle, and so the place that you would reference in the future. As a matter of fact, just for fun, I made like I made a tool. I'm a software engineer, so that's where I get my kicks. Trading is kind of just something I do in between. If we have a look at, where's the X-ray? I just want to show you like a cool tool. Let me remove all these. Remove all that. And then here it is. This is pretty cool. I think you guys will get a kick out of this. Boom. Like that. So let me remove all these. Okay, so now what I've done, this is my X-ray machine, my Forex X-Ray. So what this does, okay, let me remove these, line, white, sorry, black. Let that go away. Okay, so what I've done, just for fun, just to help me take an X-ray of stuff, is I've created a small piece of software that shows me what's going on multiple time frames. So I can see that we have a weekly candle, weekly because it's orange, a weekly candle that goes down, and then I can see a daily candle that goes down. We have a little break, and then daily candle goes down once more. And so here I can see that within the daily candle we have 4 hour candles. So I can see 3 time frames on the same chart. And this just enables me to, I mean, if I'm in a hurry, for example, then I can go like that, and I can just go through these pairs one at a time like this, just to see if there's anything that's super obvious. Looks a little bit messy, but there are normally some very clear patterns. There's actually a very clear pattern on Bitcoin we can have a look at. Let's go to Bitcoin, crypto here. So this is a pretty clear one here. Where maybe you have to go here. Okay, cool. So here you can see that the top of this candle is green. So that's one of those green candles, you know, that we saw. The tops of these ones are white. So these are the accumulation distribution candles. This is the extended, or the ERC as you called it. I call it like a price imbalance. This is essentially a price imbalance candle. Okay, and you can see we had a price imbalance candle here. So the origin of this monthly price imbalance candle is here. And within that we have a weekly one that's doing the same thing. And within that weekly one we have 2 daily ones that are doing that. So if we go down to the small time frames and analyze that, you can see this is a week. So this is the third week in the month. On Monday, nothing happened. Tuesday, nothing happened. Wednesday, boom, people started to buy. Okay, and so what I would do is I would mark off, I would look to go for an entry somewhere around here to buy Bitcoin at this particular spot. Because I know that when we have weekly commitment like that, well, then I think there's a pretty high indication that people are looking to buy Bitcoin at, what is that, about $19,700 or something. Crazy, isn't it, how Bitcoin has gone through the roof? But this is what I'll look for, and this allows me to see it on multiple time frames at the same time. But so if you're a programmer, I advise you to write something similar. It's just quite fun, I suppose. Good. I kind of jumped all over the place. I kind of apologize for my random walk, but if you guys have any questions about anything, I'd love to have them, and then we can kind of talk about whatever else is on your mind. Any questions at all? So we look at this, and the next question is, where's Bitcoin going to go? I think Bitcoin is going to the moon. And here, look at this. This is exactly what we talked about. This was the entrance, the entry that we discussed, where we know there's something here. This is a candle to the left. This is, actually, let me see if I can put my default template on. Boom. Okay, so here we had an area beginning of the sell zone right there. This is a candle to the left. This is where we want to sell. Price came to it almost, but now it's gone. And where's the area that removed it? We've got it right here. Right there. Just there. Okay, then you could argue, yeah, this is continuation pattern, but the area that price had to pull back to in order to leave to those highs, where is that? When you could argue that it's down here. Price went up, the slingshot was pulled back, and then we left. So there are a couple of areas there. But this one here, this candle here, is the one that removed this area of supply. This is supply because we had this area here that was tested once or a couple of times. Once, actually twice, 3 times, 4 times, and then price went through it, and then this one cut through it. This one did it. This is where we trade. This one's gone. Which one did it? This one did. Right there. So now we have a bias, 34,000 about a Bitcoin. That could be an interesting turning spot. But we do have this here. Price turned here, so there's a keen interest to sell here. Price turned around. So the beginning of the sell zone is at the edge of this box at 40,000 bucks on the money. So that could be an interesting area, especially after a price imbalance like this one. We can expect that price would have a bit of a breather before it has another attempt to move through, because this area of demand is really far away from this area of supply. So the likelihood that it could start all the way down here and continue to move all the way to opposing end of the market and go through it is pretty small. Okay, if this was here, then I'd be concerned. Then I would expect that it would pop through. But because we had this price imbalance all the way down here that had to first remove this and then remove this, and then is it going to remove this? Well, stranger things have happened, but I would probably expect that it would have a bit of a pause before it did so. And you can see this wick going up and this wick going down. So we're probably going to have something on the smaller time frame that shows us. Oh, we're on the 4-hour chart, right. It's going to mark that off. We'll go to the 15-minute chart. We can see if we can find. Yeah. Yeah, well, it's just messy and all over the place. Okay, so that's what we have there. Yeah, any questions? Going on for 50 minutes already. I don't want to keep you guys any longer than necessary. Well, I shan't ramble on more than necessary. If any of you guys have any questions, feel free to shoot me an email. Pipnotic as my email. You can write to me. I've got a big a Discord channel. And if any of you guys want to jump in there, you're free to do so. Let me pause sharing my screen. I'm just going to get an invite to Discord. Sorry, to the chat. You guys are more than welcome to come and say hello. We've got a big room, about 300 guys. Okay, here. Resume here. You guys can jump in there. That's what we have. That's where we hang out. We've about maybe a couple hundred guys in there. It'd be a thrill to have anyone in there. You can ask questions, and there's a lot of really cool guys in there. We have a few institutional traders in there, and there's other guys like myself who may be interested in the algo trading side of it and quantitative analysis, and there's all sorts going on. So feel free to hop in. I think the link lasts for 24 hours, and then it expires. Good. Well, I shan't keep rambling on. I know it's Friday, and maybe some of you want to get a head start on the weekend. So, Adelinda, I helped maybe shed a bit of light on things, and I advise you to try out the divide and conquer chart where you have the buy side and the sell side, and you mark that off based on the major swings. So first of all, what direction are the swings moving? Are we moving higher? Are we moving lower? If we're moving higher, we're taking out highs, we're respecting lows. Well, then you want to have your green box on the left side and the red box on the right side, and the opposite if you have lower lows and lower highs on a macro level. And then this is really good because it does indeed force you to sit on your hands and wait for price to approach real supply and demand and not reactions to supply and demand. Okay, which I refer to as children supply and demand. Good. Okay, well, I think I'll wrap it up with that. If no one, hey, it's such a pleasure, Carlos. Thanks again for your support. I'm pleased you made it. If no one has any questions, I think I'll knock off for the day. The sun is shining here in Mallorca today, so we're going to head up. There's a nice spot on the west coast of Mallorca. I think we'll wander up there and grill some octopus on the beach with my wife and my kids. Hey, such a pleasure, FX3. Thanks so much for having me. And thanks everyone for taking the time to come here. I really appreciate it. If you have any questions, shoot me an email, click on the link if you want to jump in the chat room. Got a ton of really cool people in there. It's just a nice, safe environment. There's no one there that'll say anything nasty. Any questions you have, you can ask them with complete confidence that someone will take the time to answer them. Yes, indeed. He was indeed. You can actually go up there. It's beautiful up there on that bit where he was. It's such a beautiful, beautiful spot. We live in a village called Santa Maria del Camí, and just up the road there's a spot called Alaro, which is an even smaller village, and it's just at the foot of Alaro Castel. It's beautiful there. It's absolutely stunning. Okay, everyone, I'll finish up. Thank you all so much for being here today, and have a superb weekend. Will do, you too.